Well, welcome to June. Each month, we take a look at what's happening and put together information to give you the most up to date look at the market. Let's start with a look at the Bureau of Labor Statistics, the release of their June report for unemployment numbers. Well, the big shock was the gain in jobs. The projection was a continued loss of jobs, but instead, in most of the categories, there were job gains with a total gain of 2.5 million. Well, as expected, food service workers represent the largest gain in employment as restaurants and food service businesses began to reopen. Even with social distancing, 1.4 million of those folks are back to work. Then we have construction and education and health services. The doctors and dentists' offices are opening back up. And a bit of a surprise is how quickly retail jobs have begun to return. The expectation was that people would be very hesitant to go out and go shopping, but retail numbers are much stronger than expected. Macy's came out and said that their sales numbers are blowing away their daily sales projections. So, as the economy comes back, the job market comes back. The red numbers, well, hotels and travel, they're still struggling. And government, which is primarily the local city state government jobs, they're still affected by the pandemic shutdown, but are expected to return as reopening continues. So, in general, a much better than expected jobs report. So much so that CNBC said this: the May gain was by far the biggest 1 month job surge in U.S. history since at least 1939. Now, that surge, it was predicated by an unprecedented circumstance and huge job loss numbers. Still, a significant gain when the expectations were a continued loss. So, what happened with housing? How was that affected? Well, new home sales, new builds, were expected to drop about 22%, but actually rose slightly in April. So, while the increase was slight, the expectation was for a significant drop. In our Phoenix area specifically, there was no impact. April 2020 closings for new home builds, well, they totaled 1821, which is up 4% from April of 2019. And that leads us to projections about home price appreciation. What you're looking at here are projections from 6 experts, and 5 of the 6 are calling for appreciation this year, 2020. 3 of the 5 are calling for appreciation of over 3%. As we look at 2021, all 6 are projecting home price appreciation. Well, the story on appreciation is being driven by the lack of inventory across the country. We have little more than 4 months' supply of homes available for people that want to buy, which is an undersupply. Now, that will vary depending on where you are and your price points. So, let's take a look at the greater Phoenix area in more detail. While new home closings, the new builds, were up 4% from April of 2019, well, investor flips, they were down 37%, and distressed sales, foreclosures, REOs, those were down 64%. And normal resale closings, those were down 28%. Overall, closed transactions in April 2020 were 9,236, which is down 25% from April of 2019. Dollar volume was down only 18%, due mostly to the new construction home prices. And here's some interesting information. Buyers intending to use their purchases as a primary residence, well, that rose from 72% to 82% of purchases in April. Every other type of intended use, well, it fell sharply. Investor purchases, they dropped from 11% to 9%. Second home purchases dropped from 13% to 8%. And the online instant buyers, the iBuyers, those purchases dropped from 3% to less than 1%. So let's get to some detail. For all price points in the greater Phoenix area, contracts, well, you can see they're continuing to go up. The low was 1641 back in April. And in June, ending the week of June 7, 2763, the number of contracts for that week. The price per square foot, same story there. From a low of $179 a square foot, now we're back up to $187.96, almost $188 per square foot. For the under 300,000 price band, we're seeing a very strong rebound there. As a matter of fact, we will have almost guaranteed multiple offers on most properties under 300,000. Back in April, 889 for the weekly count, up to 1325 this last week of June 7th, and steadily increasing in the price points, and that is being driven by the multiple offers. So from a low of under $150 a square foot, and we're up to 158, almost $159 a square foot. And in the $300,000 to $600,000 price band, we've got a steady increase. Back again in April, the low was 644 for the week. Now we're up to 1,169 for the week ending June 7th. And a very, very steady price per square foot, really sitting right around the $178, $179 per square foot. Similar story in the 600,000 to a million price band. Very steady increase on the sales numbers, the accepted contracts, a low of 68 for the week in April. And now we're up to 220 ending the week of June 7th. Prices, however, a little bit of a different story. We're seeing some volatility there, and as the volume goes up, we're seeing the price points. They're pretty steady, but they're down from a high of 235 back in February, March, right around the 227, 228. But we are seeing a slight rise as well. And the over a million price band, we are seeing that increase as well from a very, very low of only 27 contracts for the week in April and up to 82 and 77 the last couple weeks in end of May and June. And the prices, same thing, a sharp decline. And we're seeing some recovery, a return to around the $370 per square foot for the luxury high-end, over $1 million price point. That's a quick update on some of the new numbers that are in the end of May. We'll have more information for you to keep you informed when the June numbers come out. In the meantime, if you have any questions at all, whether it's an overview curiosity or very specific to something you might be considering, please don't hesitate to give us a call. We're here when you need us.